Hi, my name is Colin Overweg. I'm a certified financial planner, owner of a virtual financial planning company, and for the past 2 years have been recognized by Investopedia as a top 100 most influential advisors in the country. The video you're about to watch is a live recording that I did through TikTok or YouTube. Just as a friendly reminder, the opinions expressed in this video are my own and not the official opinions of Advise Wealth Management or its employees. None of the information in this video should be taken as investment advice. It's very possible some of the stuff I say is inaccurate because I'm doing this live and I don't have the capacity to go back, rewatch this, and edit it. So with all that being said, I hope you enjoy the video.
There he is. What's up, Colin?
Hey, Caleb, thanks for having me on. What's going on, man?
I just made this work for the first time. I never tried this before. So thanks for
I
thanks for pushing me into new waters.
That's what we're trying to do here, right? That's a good plug-in for the Investopedia 100, right? We're trying to get Caleb to stay on the bleeding edge here of all the social media.
Yeah, well, we got some people popping in here, it looks like. I said they could ask us anything, Colin. So really we're gonna leave it wide open, but hopefully your eyes are better than mine. I'm gonna try to we'll keep the questions going, but it's good to see you, my friend. Tell the good folks if they don't know who Colin is.
Yeah, sure. So I am a certified financial planner. I own my own financial planning practice. Started it back in 2018. Graduated from Michigan State back in 2015, and since then have expanded the virtual firm to a team of two, about to be three. I'm currently living in Los Angeles and just living the dream out here. And
Just a
also, oh, go ahead.
just another Spartan in Los Angeles. Perfect.
Exactly, exactly. And absolutely need to plug the one of my more favorite accolades of being nominated as an Investopedia 100 advisor, which Investopedia is actually just rolling out the applications now. So if there are any advisors out there who are excited about creating educational content, pushing the industry forward, and sharing the good message of all things financial planning and investment management, make sure you send out that application and get your name in the hat.
Thank you. Appreciate that, Colin. We love the Investopedia 100. We love financial advisors and financial planners like yourselves. We think everybody should have one if they can, and they probably should, even if they don't think that they can. It's one of the best decisions I ever made. I'm the editor of Investopedia. I've been doing this for a very long time. I didn't know what I didn't know until I started working with my advisor. But also, we like to celebrate people like you, Colin, who bring the financial literacy, bring the financial education, spread the love throughout the industry, lift the industry up, and really help people on the lifelong journey of investing and building wealth. So our salute to you, my friend. Good to have you here. Good to be live with these TikTokers. We got questions popping in. Um, so let's see if we can take them. But I know you have a lot of questions already from people that write into you, and we get that all the time as well. So I'm going to take this one that I just see sticking here because it's got me. I have $1,000 and they want to turn it into 5 grand within a month. How do you do so? That's magic. And the only way you can do it is by taking an enormous risk in gambling, but you stand to lose it all. So investing is not about taking 1,000 in one month and turning it into 5,000 by the end of the month. That's more like gambling. But we can tell you how to do it over a 5 year period, over a 10-year period. We can even tell you how to make 1,000 into much more than 5,000, but it takes discipline, it takes learning. I know nobody likes to hear that, but really that is the secret. It's a marathon, not a sprint, my friend. So, Colin, give me some of the questions that are bubbling around you, your practice, and that just young investors have these days.
So I love that, and by the way, we're going to be seeing different questions. It's a feature that I'm not a huge fan of on this platform when you're live with someone. So the questions you're reading are going to be different from the people who logged on and are following me. And
That makes sense.
yeah, exactly. So of course we're going to have different questions. So feel free if one is kind of staring at you like that last one to go ahead and pause me, grab a great question. I'd love for the listeners to be engaged. It's going to be a lot of fun to have the audience involved. But actually, just wanting to continue on that conversation of the how do you turn 1,000 into 5,000, because that really does speak to such a larger issue that I see, especially on the TikTok platform. It feels like the day trading and a lot of that. The first question I received, by the way, was how do I get a leveraged IUL product? And what do you think about that? So maybe let's kind of just continue on yours, and then I'll ask about the IUL in a moment. What, Caleb, is the difference between investing versus trading? Like, isn't that what investing is buying stocks and trying to pick the correct ones?
Yeah, but trading is something you do more like, making bets. And if you do it right, you're making small individual bets and you have a strategy and you have risk management in place and you're really trading either throughout the course of the day, sometimes just the morning, sometimes just the open, sometimes just after hours. So you're really trying to buy low, sell high, dispassionate about holding on to any assets for growth over the long term, just looking to make the quick buck, the quick turn, which is fine. It's extremely difficult to do that and make money doing that over and over again. You can have a lucky streak, but you can have a really unlucky streak, and it's tough to bounce back. So the way to trade responsibly is to really learn a strategy about risk management, how much to risk for each trade, what you're
Hmm.
going to trade, have signals, know your technical analysis, be very comfortable with the investing platforms. That is a practice. You cannot just do that sort of off to the side. You got to be watching that constantly while you're doing it. Investing, which is where you and I sort of hang out, is building wealth for the long term. And it's not just picking the right stocks, it's building a portfolio and a plan around wealth that allows you to be the you want to be eventually. We're not talking necessarily about the big R retirement, though that's what the industry, kind of put on us. We're talking about what does it cost to be me today, Colin? What does it cost
Hmm.
to be me in the future? And what does that me look like? Do I have a family? Am I putting kids in college? Am I on my own? Am I trying to start a small business? Am I running a big business? Like that's all part of the plan where people like you come in handy, which is, when people come to see you, they don't say, tell me what stocks to buy. Of course they do. But what they're really saying is, I want to build wealth. Like, help me manage my financial life and my future so I can be the me I want to be. That's where investing comes in. That's investing in buying assets for the long term and being strategic about where you are in your life, what age you are, what life stage you're in, where you're heading, where you want to be. Am I right or am I right?
You are absolutely right, Caleb. Thank you for that wonderful description there. If I were to summarize, it sounds like trading basically is the short term, more and less speculating. In order to do that, number one, it's extremely difficult. Very few people can do it successfully, even compared to just buying and holding low cost index funds. So it's a very dangerous game. You got to know what you're doing, and asking how do I turn 1,000 into 5,000 is almost like asking the wrong question.
Right. We reject the premise, but we understand the sentiment. Everybody wants to do that, and you hear stories about it all the time, and people love to
Hmm.
brag about it on this platform and other platforms. And that happens, and people get lucky. People also get lucky at the casino. People also get lucky in sports betting. So we're relying on a little bit more of that if you're trying to make that type of a trade. But the best traders we know, and you and I know a lot of them, these are people that do this as a job. They're up in the morning getting their charts together. They got their setups. They have their watch list. They have a plan. They have a journal of what's worked in the past, and they go small, but they clear $1,000 in a day. By lunchtime, they're done,
Right.
and they have discipline. They know when to shut it down, know when to hold them, know when to fold them, know when to walk away, and when to run. And when you're trading, you got to be totally focused on that 1,000%. You may get lucky here and there. You buy this token or that stock, and it goes to the moon, but that's really the rarity. So that's the big difference there. So you and I are like we're more in the how do I educate myself? How do I teach people to fish? How do I learn how to do this for myself? So this is a lifelong journey. This is not you're not going to make 1,000 and $1 million in a year and then be done. It's a
Hmm.
lifelong journey. Your relationship with money, your relationship with wealth, that is a lifelong journey. Um,
One of the things that I've been preaching within being able to customize your portfolio and maybe get into Bitcoin or hold that individual stock that you really love is kind of having the distinction between your core and your explore. And it rhymes, so it's cute, so that's what I go with. So your core is your financial freedom plan. Are you on track to retire? Are you on track to live your best life? Are you on track to, buy the house or send your kids to school or whatever is important to you? That is your core. That is, in a lot of cases, at least my belief, your low-cost index fund portfolio. You're globally diversified. You're spread all over the place, and you're trying to get market performance or something that is equivalent to your risk tolerance. And then your explore part of the portfolio is kind of the cherry on top. That is the money that if it goes to zero, it's not going to impact your ability to live your best life. What do you think about that kind of distinction there?
Absolutely. And that's the way I do it too. I'm a super boring investor for the
Yeah.
long term. But I have 5% on the side where I do things. I
Yep.
don't do individual stocks because I'm a journalist and I got to write about these and talk about them. But I do ETFs and I do index funds and I got some crypto. I want to know about these asset classes. I want to understand them. I enjoy that. I do that with my kids too, right? We have custodial accounts and we pick different assets to put there. So I love doing that. But also that 5% just for that won't wipe me out. That's super important. But we're getting some good questions here on my side. And I'm going to take them just because I can tell these people really want to know. So
Fire away.
Mike's asking us how we're feeling about gold, and then Bike for a cause is asking about bank stocks, whether to bail on bank stocks. Let me take bank stocks first, and then we'll take gold. I'm not going to give recommendations, sir. I'm just going to give you the way to think about it as an educated investor, because that's the way we roll here. Like how to think about these things. So let's take bank stocks right now. Obviously, they've been getting crushed over the past week or so since Silicon Valley Bank was taken over. The huge comeback yesterday because there's a lot of bailout money, right? The government not calling it a bailout, but so far all these banks have taken about 180 billion dollars out of that Fed's borrowing window that they just opened up, and the Federal Reserve has made this unusual move. Usually, banks loan to each other on a 1 week, 7 day loan through the discount window. They said now they can borrow within the same day and pay back within the same day. So they've made it easier and added liquidity into the banking system, which is why you've seen bank stocks rally so much. Plus,
Mm-hmm.
the Fed's meeting on interest rates tomorrow. If it doesn't raise rates, or if it says this may be the last one for a while because we realize the damage we've done to financial stability, that's going to chill the fire under bank stocks for right now. So I don't know if you want to bail on bank stocks now or if you've been buying them for a trade. They are super volatile at the moment and go like that. We've seen companies as big as Schwab lose 20% in a day and have the stock get halted. First Republic Bank, a real bank. You're out in California. That's a real deal bank that had a lot of assets under management, maybe not that well managed given the risk, but that's a real deal bank. It's about potentially to get sold off, or
A lot
so
of
it's
clients
a
there.
really it's a scary space. If you're looking to trade it, if you're looking to invest in it, then you've got to believe in their balance sheets and their health is going to get better over the long run here, and they'll come back to health. Um, so you have to believe in that part of that's that part of the story. And right now that story is a little bit unclear. So I would say okay to just sit back and watch this one play out.
That Warren Buffett would put that maybe in the too hard category.
Yes, yes, right. If you can't figure it out in your own mental calculus, that's probably too difficult to invest. Now, somebody asked about gold,
Yep.
and gold has always been sort of, or traditionally been that flight to safety that people go to when the stock market's scary, or when other asset classes are popping around, and gold happens to be at or near a 12-month high.
Mm-hmm.
That's important because a lot of investors, especially older investors, hold gold or hold 10% or more because they do think it's a store of value, and I guess it still kind of is. That said, it had been a 20-year long slumber for gold, right? As an important asset class that was really going to deliver high returns until this chaos of the last year. So if you believe we're going to have this chaotic, grinding, uncertain economic environment and a weird, volatile stock market going forward for the next couple of years, then gold could probably do okay. But it is not the asset class that it was once upon a time ago, and it is not something that is going to, make you rich. It's just going to be really heavy in your portfolio. That's my take on it. Do what you
Yeah.
want. You can have a little bit of exposure, just like any balanced portfolio should, but just think about it, why it's done well, and then think about whether that same dynamic is likely to play out. What's your take?
I think that's a fantastic take. I liked how you ended it with, diversification is key. Curious how you feel of my thought on commodities. The main difference here between commodities and investing, like one thing I love about owning the S&P 500 is that you now own 500 of the world's greatest companies, at least held within the US, and largest companies, let's call that at least. And you're automatically right off the bat going to be receiving, call it just for easy numbers, a 2% dividend. And then after that, you're also going to have this automatic inflation adjuster. So what do you mean by that? Well, these companies are increasing their prices for their costs and their goods and their services, et cetera, by the rate roughly of inflation. So if we just use increasing their prices for their costs and their goods and their services, et cetera, by the rate roughly of inflation. So if we just used another easy number, call that maybe 3%. Now, the company's not getting any better, but their revenues are growing just simply because they're selling toothpaste for $2 instead of $1.95. that's just simply going up. So now I have a 2% dividend, I have a 3% inflation adjuster, so now I'm up to 5. Gosh, I sure hope that they're going to continue to innovate to the tune of maybe 3, 4, 5%. And now I can clearly see how I can start to get an 8 to 10% annualized rate of return. And I'll be darned, that's what the market's averaged for the last 100 years. So, like, to me, that just seems so clear and cut versus gold being like, there is no dividend, there is no inflation adjuster for the products and the services that gold provides. It's kind of, it's a commodity, right? You like it if you like it, and if you don't, you don't. It feels more of like into that trading camp, the speculating camp that we talked about earlier. If you buy it and hold it long term, that's great. Hats off to you. I do believe it belongs in a diversified portfolio.
Yeah, great. That, like I explained like a CFA, but with more poetic prose. You obviously know your stuff, and he's not wrong. 8.5% a year, S&P 500 average return going back 100 years or whatever, 80 years. I like that. It's not going to happen every year. It certainly didn't happen last year, but the 3 years prior, stock market was up 100%. So folks that are saying, the sky's not falling. We had a big sell-off and a brutal bear market, but it was kind of orderly, kind of contained. I like to bet on stocks for the long term, especially even at my age, which is at 52. Hey, good question here. I'm going to take it if you don't mind. Nehemiah is
Please.
found. Is there a difference in being in a recession and the federal government actually stating we are in a recession? Let me say this. The arbiters of a recession or the labelers of a recession is really the NBER, right? The National Bureau of Economic Research. They're not part of the government. They're a research think tank that looks at various economic indicators, and they're usually in the rearview mirror to tell us whether we were in a recession or not. And you really don't know until you're through it. So let the technical term or the technical definition of a recession is a slowdown in growth, a broad slowdown in growth across the economy that lasts a couple of quarters. And you look at things like manufacturing, you look at spending, consumer spending, a very big deal. You look at personal income and outlays, you look at the unemployment rate, right? So you look at all these different factors and look at them, and if they're all sort of pointing down, then yeah, you were in a recession. So that's the technical term. But recession is also one of those super heavy psychological terms, right, Colin, where you hear it, normally everybody starts to tighten up a little bit. And this recession that we've been waiting for is probably the most anticipated recession in the history of recessions, right? But the unemployment rate is below 4%, never had a recession when that's happened before. You still have consumer spending, not, backed off a little bit the last couple of months, but it's been pretty strong despite inflation. So you still have production and manufacturing kind of hanging in there. Doesn't really total, maybe a yellow siren there, and definitely not a red one. That said, and I'm glad you asked the question, Nehemiah. If you lose your job, you feel like you're in a recession. If your neighbor
Nailed it.
loses their job, you feel like you're in a recession, right? If your small business is having trouble, it feels like one. If the restaurant down the street goes out of business, right? It's a personal thing. We call it personal finance for a reason. Recession, even though it's a big, broad macroeconomic term, is a personal thing. So you could be going through, and some folks, especially I know in the restaurant business, say they never got out of one from 2020, even though it was a very quick recession. They feel it because that they're experiencing it in their own personal financial dynamic, and that kind of feels recessionary to a lot of people right now.
Such a great, I love that you started with like the technical answer and then ended it with it's personal, because isn't that just true of personal finances? And it's really hard to wrap your arms around a technical term for any of this stuff. Measuring
Yeah,
the economy and making predictions, that's a tough one.
yeah, and
Um,
we measure the economy, Colin, and with a lot of things that we used like 50, 60 years ago, and it was a different economy, a lot of farming, right? Certainly didn't
mhm.
have self-driving cars and the internet and doing this, right? You and I would have had to go to each other's house and hire a satellite truck to make this happen. So
Right,
economy's
right.
changed a lot. The way we measure it, it's got to change too.
Normally we'd have to be on like CNBC to make this thing work, and here we are live creating our own television network, just
That's
answering
right.
questions, having fun.
That's right. I love it.
Someone asked the question here, Caleb, should I still be maxing out my 401k right now? And then they said basically that they're nervous about it because the market has been so choppy. What's
Yeah.
kind of your thoughts on maxing out the 401k? What's the message to young people that they see the market down? Is that a bad time to invest then? It seems
No.
it seems
Yeah.
like it's intuitive though, right? It's
I
actually
know.
not.
That's not. You know, as Warren Buffett likes to say, be greedy when others are being afraid, and be afraid when other people are being greedy. But more than that, if time is on your side and you have the ability to max out your 401k, in other words, you don't need to take almost more dollars home from your
Mhm.
paycheck rather than divert it into your retirement account because you have expenses, loans, you're taking care of somebody. If you need to take care of those types of things, then you got to rethink the answer to this question. But if you can handle your bills and all your responsibilities and have the ability to max your 401k and potentially get your company to match it, green lights ahead. Go. Max it out.
Let's go.
I'm 52. I'm maxed out. Pedal to the metal.
Let's
And
go.
I expect to be investing for at least another 25 years. I'm maxed out. And because one, it's putting money away while I sleep. It's paying myself first, which I know people
Mhm.
like you love. Pay yourself first. And that's a great way to do it. I've already chosen how I'm going to invest it. I've gone over that with my advisor. We have a plan. Even when the market gets shaky, guess what I do? I buy again every 2 weeks when I get paid. That's what I do. I keep buying and dollar cost averaging in and taking advantage of that fairy tale dust that blows over the stock market we like to call compounding, right? That's the magic of investing. That's wealth building. I love it. So definitely max it out. And if your company matches, take the full match, full steam ahead. What do you say?
Absolutely. I couldn't have said it better. I mean, one analogy I'll often make, just because I like telling stories, is if, when things go on sale, if your favorite clothes, your favorite brand goes on sale, you go and buy it. If the world's greatest companies go on sale, for some reason people run in the other direction.
It's so weird. So
It's
weird.
not the right way to think about it. I know it is a little instinctual to say, "Oh my gosh, I'm hurting, my money's gone. Do something, fix it." That's not the right way to go. That's kind of our primal brain speaking us to, fight
Animal
or flight.
spirits.
You got it. That's exactly it. So, um, yep, we got to make sure that we stay the course, continue buying while it's on a discount. You're going to be thanking yourself later.
Yeah, you said it right though. The stock market's the only store that when everything goes on sale, people rush out of the store.
What's going on?
But I get it. And you know what? Like we say this all the time. You and I pound the table on stuff like this. It's easy to say, right? We've also had a bull market. You've had one probably your whole investing career, but
Darn near.
we've had one for a long time. So you feel like, what could go wrong? Look, it's okay also to do nothing, right? People like, you have to put money to work for your clients, right? I put money to work. I'm a tuned in individual investor, but people don't have to do anything. Making a decision to do nothing is also a decision. But if it's like I'm too afraid to make a decision, but I have the means to make a decision, then you're just better off investing and thanking
Hmm.
yourself 10 years later for not being afraid to do that when everybody else was afraid because your 10-year later old self is going to give you a big old hug if you do it today.
That's right. So if we were to kind of go down that checklist maybe of the things that you want to make sure that you're able to do, maybe prior to maxing out the 401k, because the biggest issue with maxing out the 401k, then the market goes down, you lose your job, and now you have to pull money out. Not only are you getting hit with taxes and penalties, but you're also pulling out while the market's low. You're shooting yourself in both feet. That's really a bad recipe for success. So when someone's just getting started here, a lot of people will talk about emergency funds, reducing debt. Do you subscribe to the emergency fund? What's your thought about keeping cash on the sidelines?
Yeah, I think old school, but I like cash on the sidelines. Um, for a bunch of different reasons, and some of that is just my own psychological relationship with money,
Yep.
which is complicated. But there's a reason that I like it. But I think that emergency fund is important, and especially as you get older, if you're going through life stages, especially if you have a family, you don't want to not have that. So you got to be
Hmm.
thinking. We used to say 3 months. These days I say six. I know that's hard to come up with 6 months of scratch for everything, but think
Hmm.
about the things you would have to pay if all of a sudden the money ran out. What would you have to have money for? What would you absolutely have to have money for? Make sure you have that set aside or have the means to get to that. So that's a big deal. Big high interest rate debt, right? There's nothing that gnaws away at you more and eats away at your net worth and your ability to grow wealth than having high interest debt. Why buy a $40 sweater and pay $80 for it because you haven't made the credit card payments on time? That makes me so mad. So I'd like to wipe that out. If you have high interest rate debt, you better consolidate it and start paying that down, right? I think that's more important. That could hurt your ability over time. That said, if you could do all of these things at once, and let's say you have all these problems, right?
Yeah.
But if you can do all of these things at once by paying yourself a little bit, whether that's through your 401k, IRA, Roth IRA, whatever it is that you have, your SEP account, paying yourself a little bit. I don't care if it's $100 a month, right? And some money in savings, that other bucket for savings, and then there, everything else for everything else. You're going to be better off, and you can handle these other problems. But you need a plan. It's not just, you know, playing defense the whole time and you got 10 players running at you. No, you need a plan. And that's where planners
Hmm.
like you come in handy, but also you put out resources. We put out resources for dealing with this very thing. So we never want you to delay investing and saving because that is the golden ticket. That's the ticket to wealth. But if
Hmm.
you got to make sure that everything is set.
So it's like laying that foundation first and then just start building wealth, and you're going to be way better off than building a house of cards that doesn't have a good foundation.
Right. And know what you own and know what you owe. And, you know, having that financial awareness, we say that's so important. Situational awareness. I
Yeah.
tell that to my teenage kids all the time. Situational awareness. Know what's happening on the court. Where's my
Yeah.
money? What's coming in? What do I owe? What are those monthly bills? What am I goal? Like, know the sitch and then make your decisions from there. But don't just, fire
Mm.
off decisions willy nilly because without a plan, you're going to be
Yeah.
spinning in place for a long time.
And it seems so obvious, but it's really interesting when you're in the driver's seat, you have to get groceries, you're picking up kids from school, things are coming at you all the time. You're probably a really intelligent person within your job, but it's really easy for the money stuff to kind of slip onto the back burner and then find yourself, oh my gosh, I didn't pay my credit card, I don't have an emergency fund. Now I'm withdrawing money from the 401k. So give yourself some grace, but situational awareness, that is a key takeaway here. Make sure that you know what's going on and keep that foundation solid.
Yeah, absolutely. Absolutely. And, the two things we don't like to talk about, Colin, right? Money and health. Our money and our health. What are the things
And
that get us at the end of the day? Those
money and
two things.
health. Yeah,
Those two
yeah.
things. So we like to have a conversation about it all the time. We're constantly talking about it. I know you're constantly talking about it. You got a great following, and also you use your platforms, for that reason, which is spread the knowledge, spread the education. Right? There's nothing much more interesting and integral to your life beyond your health than your financial health, because these things are tied together. Believe me, how many people do we both know that you know the financial stress ended up getting to them physically, one way or the other? It happens all the time.
It's true. It's true. I mean, they say a person with bad health only has one wish, but a person in good health has many wishes.
That's right. That's right. You said it. You
Um,
said it.
Good question here. What does Caleb think taxes are going to be like in the future? Are taxes going up? I know that we're not, people who make guesses, but, is there a gut feeling or maybe
Yeah,
is there anything
I have a,
that you're planning?
I think I have a pretty clear answer to that question, which is
Okay.
in the next 2 years, taxes are not going up. The tax brackets change every year, right?
Right.
Right. The bracket's not your rate, but the bracket you might fit in based on your income or your marginal income, that changes. That's going to change every year. Set your watch
Mhm.
by it. The IRS changes it to, you know, account
Yep.
for inflation.
Yep.
The tax rate is not going up in a divided in a split Congress like this, right? When in a
Yeah.
split Washington D.C. with the
Hmm.
Republicans in control of the Senate, no tax increases are happening. We already did through the Biden administration that 15% tax on corps, but he's not raising. He's not going to be able to get the billionaires tax passed, and he's not going to be able to get a higher tax rate passed for corporations in the next 2 years. If if President Biden runs for re-election, if he gets reelected, if the Democrats end up controlling both houses of government, then he has a chance. But those are a lot of ifs going out a lot of years. Now,
Hmm.
in 2 years, if there's a Republican president, potentially, and the Republicans control the House and they want to pass a tax cut, that's much more likely to happen, right? So
Yeah.
it's all about the political climate. Nothing's happening in the next 2 years. You can pretty much accept that bracket change, which already changed for this year. It's a big increase, probably the biggest since I think 1943, post World War II. So that's my prediction on taxes.
Nice. I think that's a really good way to look at it. And are you making any adjustments to your personal plan based on taxes?
Not because of, well, that's a good question. So I'm a W-2 employee, right? I work for Investopedia. We're owned by Dotdash Meredith. So I'm a W-2 employee. That said, I have a side business. I have a production company. I
Mm-hmm.
have a production company that makes movies, documentaries and movies, short movies and feature films. Um, do them mostly in New Mexico, but whatever. It's my production company, Frog Pond Productions. It's an LLC. I'm the principal of that, and it is a pass-through entity for me, so that if I make money through that, I get taxed on that as the principal shareholder. But
Mm-hmm.
also, if I have losses, I'll take those through the LLC. So that's a not I not, didn't make that decision because of the tax rate. I made the decision to form an LLC and have this other thing that I do, and then apply, those losses or gains to my taxes, my overall taxes. So that wasn't because of who's in office or what the tax rate is. That's just because it's a strategic business move that I should make owning a small business while I do my other thing. So I haven't done anything like that. I've made other changes given the way the world has moved in the last 12 months
Yeah.
to my portfolio for sure, and I'll do that every year, and I'll probably do that every quarter, but not because of taxes.
Okay. So it sounds like let's be tax savvy, but we're not going to be making massive investment or wealth building or financial planning decisions based on where tax rates might possibly be.
Correct, unless the wind is blowing in a certain direction because all of a sudden, because of political polling or whatever, fine. But like the
Yeah.
decisions you want to make around taxes, if you're trying to offset income, or if you're trying to give money to somebody based on
Hmm.
the estate tax and charitable contributions, those are the kinds of tax decisions you should be thinking about
Yeah.
versus, unless you're suddenly going to go from, the 20% tax rate to the bracket to the 32%. Like if your life's changing that much, then you've got to get with a financial planner and make smart decisions like that. Like my advisor and planner, most of our conversations are about that because we already have a plan for everything else.
Perfect. Any questions that are popping up on your end? Otherwise, I might take us in another direction. And I know that we want to be cognizant of your time here, maybe 5, 10 more minutes if you're open to
Yeah,
it.
let's do 510, but I want to hit this one because I love this question.
Perfect.
Thoughts on the Fed Now service launching in July? Will this lead to CDBC before 2025? Let me try to translate that. FedNow is going to be the Fed's digital money service, I believe, and they've been had this plan in the works forever. My buddy is over there helping launch this. Will this lead to the CDBC? I believe that it's a digital. I believe that your question, Bert, is about that Fed's digital currency before 2025. I didn't read the Fed's press statement on this, so it's a little bit uninformed, but I know what Sunanya and team have been up to over there. Um, they're launching a digital currency to make it easier for those, I think, that are underbanked, but also because they realize what has gone on in the world of cryptocurrency in terms of those distributed ledgers, that it's much easier to transact in this way, less friction in the money system. So do I think it's going to come out by 2025? And we're not talking about a Fed Bitcoin here. This would be whatever digital currency that is. You better
Hmm.
believe it's going to be fully backed by the full faith and credit of the United States of America, because
Hmm.
this is the Federal Reserve we're talking about. This is not Puerto Rico buying Bitcoin. Um, so 2025, I don't know. I didn't read the statement, but I'll check it out. We might even have an article on it on Investopedia, but it's a big deal and it's about time. And I think, one thing that crypto and Bitcoin and all these other things have woken us up to is the, how blockchains can really be effective in financial services. And I'm not talking about chasing coins to the moon. I'm talking about, improving and reducing friction in financial services because of distributed ledgers. I think that's smart. I think a digital currency from the Fed is smart. You'll see other central banks do it. It'll be the
Yeah.
way things work, and your kids and your kids' kids won't even know what a $20 bill is by the time they get old enough.
Do you mind expanding on that for a moment? I know a lot of Bitcoin and crypto to the moon conversations are on this platform as well. Do you mind just kind of sharing your thoughts on, maybe I'll even ask bluntly, do you own any Bitcoin?
I do. I've been buying Bitcoin for probably since 2014,
Okay.
and literally nibbling at it. It still does not represent 5% of my portfolio or more.
Yep.
Probably at one point it did. It was right a little bit higher, but not anymore. But why did I buy it? And I bought a few other coins as well. I buy Ether on the reg and
Hmm.
Bitcoin every few months. Dollar cost averaging in. In the case of Bitcoin, I believe it's going to be around in 5 to 10 years. I think it'll be here. You can already tell in our industry, Fidelity's custodying it now. We have other
Right.
online brokers and money managers that are into it. Fidelity's also been working with blockchain for years, by the way. So they're enabling it. And there's a limited supply of Bitcoin. I think that it has enough, it's widely held enough and institutionally accepted enough that I think it'll be here. And I want to be part of that ecosystem and understand how it works. So by owning it as an investor, I have
Hmm.
to make sure that I'm learning about it. And Ethereum too, I believe is smart. I think I've seen the use in software transactions and how it can be helpful. So yes, but this is me literally, Colin, going $50, $50, $50
Right.
every few months. Dollar cost
Yep.
average. What's the price? I don't care. 64,000, 16,000. Like I'll get excited if it gets up and back into the stratosphere again. But it's not my ticket, my golden ticket to the me I want to be in 10, 15 years.
Right,
It's one of
right.
them.
So this would fall into your explore category because gosh forbid it goes to zero. It doesn't sound like this is going to cripple your ability to make work become optional someday or any of your major financial plans.
No, it'll be a story I tell my grandkids
There
about
you go.
about like the tulip mania that they were talking about in the 16th century.
There we go. There we
It had
go. And
stripes. It was beautiful. The flowers smelled amazing.
it hits home for me. I am like
Yeah.
almost 100% Dutch. We fall victim to shiny things, I guess. I don't know what else to say.
Yeah. Well, fast cars and shiny things.
There we go. Right. We like two
Very cool.
things.
Or
Um,
F1 cars with pace.
there we go. There we go. Someone's saying, just a funny comment. There's a place called Financial Freedom, but I can't find it on Google Maps. Can you show me? We'll have to do, if you tune in tonight at my for my 7 p.m. program, we'll talk about financial planning.
Yeah, Colin and the Journey to Financial Freedom coming to theaters near you. I want to
That's
see that.
exactly right. So, Caleb, maybe as we wrap up here, curious maybe what some of the signing off thoughts would be for, if we kind of had to just run through our checklist, someone's just tuning in right now, maybe they're in their mid 20s and they're saying, all right, this all sounds great. I'm a little bit overwhelmed. What the heck are like the top two or three things that a young person can take away if they're hoping to just start laying that foundation and start building long-term wealth, trying to set themselves up for the future.
Yeah. Well, we say at Investopedia the best day to start investing was yesterday. The next best day is today. You don't need $10,000 to do it. You don't even need $1,000 to do it. You could do it with $100. You could do it with $50, right? But the first thing first is set that foundation. What is it that I am trying to achieve here? If you're that person asking to turn 1 grand into 5 grand, that's not the same conversation. But if you're like, I want to get going, I know this is important, and lay out those goals. If it's building wealth over the long term so that you can afford things, a car, a house, start a family, eventually stop earning an income, whatever, give to charity, whatever it is you want to do, start a business, then know what that plan is, know what the North Star is, and build back from that North Star because you get to there, that ladder to the stars comes with planning, investing, saving, taking advantage of the magic of compounding, right? And that is owning securities, stocks, index funds, ETFs, some bonds, some other asset classes that have the propensity to grow over time and show that they have, right? And continuing to invest in them and adjusting your risk portfolio depending on your age and your goals, right? But it sounds complicated. It's not. When you start at the top and say, I want to get to this, what things do I need to have in place to build it? And one of the most popular articles on Investopedia, we have two that are super popular, and it's the same question, but for people at different stages, is how do I start investing with $10,000? How do I start investing with $1,000? The answer is probably very similar.
Hmm.
Um, but these are step-by-step guides with tables of contents and little videos and diagrams to really help you get started. So we have all those resources. People like you have these resources as well. It's never been easier, but you have to start with the goal and then work backwards and build a strong foundation. And once you get it going, you can't set it and forget it, right? But the beauty of it and why I love it, and I didn't even start in this business. I'm a restaurant guy. I was in the restaurant business for 12 years in New Mexico, and I was an art major, and I had no business being here. But once I started learning about it, I got so hooked on on the learning and the fact that the educational journey never ends. That here I am, 52, the editor of Investopedia, a great website about this, and I'm still learning every day, and I'm going to keep going for the rest of my life. So it's a lifelong journey and it's fun. And it's, it can be scary like everything else in life, but if you have the plan and you feel like you're on top of it, man, it's so empowering. And then you can do the things you really want to do with your life. So those are my parting words.
That's awesome. Thank you so much, Caleb. Number one place for education on the internet, investopedia.com. Go check it out. Thank you so much, Caleb, the chief and editor-in-chief, excuse me, of investopedia.com. Thank you for being with us today. This was a ton of fun. Hopefully we get a chance to hop on here and answer some more questions in the future.
I love it. Thanks. This was fun. Bye, everybody. Thanks for joining us. We appreciate you.